Thank you, everybody, for your patience. Hi, everybody. Good afternoon. My name is Hannah Horn. I'm the Vice President of Public Policy and Programs at the Chamber. And welcome to our 876,000th day of COVID and trying to understand all that is going on around us, including these loan provisions. We, like you, have been watching many of the changes from day one. We know that you're confused. We're going to try to do all that we can today to sort through some of the new guidance, the new application that's come out, and just go through this together with you. As always, and as we did in the first couple of presentations and webinars that we've done, we have had to say the date and time. This is May 21st. It is 1 o'clock Eastern, simply because this changes so incredibly rapidly from hour to hour that we would not want anyone to watch this webinar in a week from now and get information that is perhaps outdated. So the information that is presented today is to the best of our knowledge, of our experts' knowledge, and we will continue to do these webinars as long as you continue to have questions. So today, the, of course, scope and focus of this conversation is regarding the PPP loans. These were loans that in the third and last wave of stimulus that came out were allowing businesses to receive loans of 2.5 times their average monthly payroll. And you were to be expected to use that on a combination of payroll and expenses such as your mortgage and rent. So that's a little bit of a background on PPP. If you are, wherever you are in the program, in the PPP cycle, whether you might be on this call and haven't even applied for it, you might be thinking about it because there is still PPP funding out there, by the way. You might have not received your loan yet or anticipating that, or you might be in the throes, even as we speak, within that 8-week critical period where you are actually spending that money, and at this point are joining this webinar at a very critical time when you need to make sure that you are in line with what guidance says for you to optimize your loan forgiveness. So the new information that is out most recently is on last Friday. There was an 11-page loan forgiveness application that was released. This was the first time that we had seen it. And if you haven't poured through it yet, get a glass of wine and hunker down and just take a pencil to it. We're going to do our best today to go through it. We have sent a link to that application. If you have not yet seen it, we encourage you again to print it out, and as we go through this discussion, perhaps make some notes off to the columns to the side, and we'll get to individual questions that you have, and perhaps even have a second edition of this webinar, or third, just to go through some of the more intricate nuances that we're finding out will be needed or included in this loan application, forgiveness application rather. So on the line with us today and our experts that are on the call, we have Fred Green, who is with the South Carolina Bankers Association. Fred has been a wonderful partner as we have gone through the COVID business stabilization loan programs. And we'll hear from him in just a moment, especially on the legislative side, because even as we speak in Washington, there's a lot happening regarding the PPP loans. Dean Konkenauer is with Carey & Company. He is a CPA as well as MBA. And so, Dean, we appreciate your expertise and insights. We know you're on the front lines of talking to clients and small businesses every day on optimizing their spend. And then Mike Waters is with SCORE, our local Low Country SCORE chapter, is an invaluable resource, and I call them trauma room surgeons for business that in this particular case show up there in the emergency room that we're all in, trying to make sure that we do this right and we survive. Fred, if I could put you on the spot here first to talk about some of the legislative changes. Even today, I'm hearing that the Senate, in the U.S. Senate leadership, Marco Rubio, as well as Ben Cardin from Maryland, as well as the Senate Small Business Committee, are taking action to pass a bill that would include revising the PPP. It would extend the period that small businesses could use the funds, as well as in the House, House Bill 6886, the bipartisan bill modifying loan forgiveness requirements. The bill eliminates a limitation on non-payroll expenses, extending the 8-week window. So there's a lot moving in Washington. Can you boil down some of these efforts?
Hannah, I'd be happy to, and let me just tell you how much I appreciate being with you and Mike and Dean and your callers. Mike and Dean are the experts on the PPP. They've dealt with many small business clients. They've taken that 11-page forgiveness form, as you said, drink a glass of wine before you look at it, because it's highly complicated even to bankers. But they've done a great job of boiling the ox down to a bouillon cube, and we'll be able to talk through that and give, I know, great advice. I'll jump in real quick on the political side of it, because there is an opportunity for improvements beyond what exists today. Obviously, we've got to deal with what is out there today, because in the political world, things that start may not ever finish. There are the bills you mentioned. The bottom line on all of those is the forgiveness period, which is currently 8 weeks, would be extended to 24 weeks, which is a huge improvement. And on the House side, the 75-25% rule would actually be deleted. So those are two great improvements on the forgiveness side of PPP. Again, it's a long way from introduction to the president signing. Again, it's working its way through both houses of Congress. I will say that it's almost like threading a needle in a hurricane, because if there's any amendment on any side, on anything, it would reduce the chances of this getting through. But members of Congress have heard the importance of these two sides. One is the extension of the time period. One is the complication over the 75-25% rule. They've listened to us, and we're hopeful that they can sign that into law, which gives all of the borrowers a good bit more relief than what exists today.
Fred, that's a really big deal, what you're saying. It completely changes the landscape of how businesses would spend that money. So would this be for those who have already received their loans? It would change the rules mid-game, or would this be simply for new PPP applicants?
Hannah, this would be for everyone. The complications associated with this, just go back to the 8-week time period alone. The first loan that closed on PPP, we're running up on 8 weeks now. So, that's the rule that's in place now. We got to deal with that. Hopefully it will work its way through Congress very quickly. There's some optimism. It might even take place next week. If that is the case, it would apply to that first loan as well as the one that hasn't even been closed yet.
Wow. Fred, if you would keep us posted on those and any other changes that come down through Washington into our bank accounts, we really would appreciate it. And we know that the South Carolina Bankers Association is doing everything that they can to protect our small businesses, as well as advocate for your particular sector. So thank you again. Stay on the line, Fred, as long as you can. We know that you have another obligation on your schedule that you've got to get to, but I'd like to turn things over. Mike, are you, forgive me, I've got so much going on through my head right now. I think you're next, and then we're going to follow up with Dean. Is that right?
Yeah, actually, I'll be happy to start. And actually, Dean and I are going to be going over the information together. And Fred, for as long as he's able to be on, we encourage and welcome the additional comments. So
Mike, when we had talked earlier this week, one of the things that, and thanks for sharing your screen there, one of the things that we had talked about was that there was a real appetite to know, all right, what do we know now that we did not know 2 weeks ago? What stayed the same? And then we're just going to open it up to questions. Does that sound like a pretty good format?
it certainly does. And so let me Let me mention that number one, on behalf of SCORE and our chapter, are very happy to represent the experts. You said expert. And what we have is in our chapter 45 mentors, all volunteers. And as a resource partner of SBA, our function in SCORE is to help all of our clients, new and existing clients, and anyone else that needs assistance. And we'll talk at the very end about how to receive that assistance free of charge and confidentially. But what we did is when the loan programs were first announced, it became very apparent to us, several of us quickly got our heads together and said, you know what, we think the best thing here is to form a team within a team. So we have volunteers of volunteers to form the rapid response Tiger team, we call it, in order to assist those that needed help right away. We had a special process, we confirmed, we got rolling. And so what we're going to talk about today with a great collaborative effort with Dean and with Fred's insight too is that these slides represent exactly what you're talking about, what we need to know now. Now it's important to emphasize a point that Fred made, and that is that things may change regarding some of the timeframes, but what's important to know, if you have received a loan already, we're going to point out things that you'll need to pay close attention to in this document. If you haven't received a loan yet, same thing. And if you decide you don't want the loan, at least you'll know how this program works and you may change your mind. And we want to point out, you know, there's always fine print, right? So we just want to say that the first responsibility that any business owner has is obviously to their business. The next is to the financial responsibility part, to the lender that made this loan to them, and the SBA and everyone else. And as we say, your actual mileage may vary. So, you know, in other words, it's your business and your interpretation is going to need to be validated with your lender. Okay, so next important part of this is Kelly who's going to advance the slides for us. So just a quick review, and that is that when we're talking about COVID-19 related CARES Act loan programs from SBA, we're not going to spend really any time on the economic injury disaster loan, but that is a loan directly from SBA and is talking about working capital with some exceptions. Same thing applies. If you have already applied for and waiting for an answer, or you have received your EIDL loan, your responsibilities to fulfill all the obligations as a borrower are very, very important. Now, the EIDL original loan program was stopped and is currently, from SBA's advice, they're working through a pretty significant backlog. But we did hear from William Furman, who's our principal line of communication in South Carolina, is that they do expect the portal will reopen with an unstated time frame. And for some of our area here, it applies that they did open EIDL for agriculture. So, but we're going to shift to the right-hand side of the column of the slides here. And just to say very quickly that there are important dates that are mentioned. And from SBA's perspective, the date of February 15, 2020 is the designated time in which the disaster was anchored. And so when we talk about definitions, when we talk about the loan program forgiveness application, it's going to refer to specific timeframes. And it's had 2 rounds of funding, and the current round is open, and there is a fair amount of money still left if you're thinking about it. So there is an important aspect of the PPP loan program, and for that matter, the EIDL too, and that is, and this was stated right from the front from SBA, is that everyone should be seeking the full forgiveness. And if for some reason they don't feel that they want to or can meet any of the criteria, but still meet the value, they're still eligible, but they're going to retain some of that as a loan, well, that's their decision. But the way we look at it, and what we're hearing from many of the clients, which have been numerous, here in the Low Country is they're seeking full forgiveness. So that's a lot of what we're going to talk about today. The process that we've been following, and as was mentioned in our first discussion, is that there were many questions that we've been submitting SCORE to SBA, and we're getting very responsive action from SBA in providing additional guidance, and then we pass that on to our clients and anyone. We talked about some of those things the first time around. The aspect that we were really needing was what we had received now on Friday and became available over the weekend, and that is this 11-page forgiveness application. And so whether you received it for the first time today that was sent out by the chamber, or you already have a copy, or you go to SBA PPP Loan Forgiveness Application, this PDF comes up. It is 11 pages long, and it does require close reading. And what our advice is, now is the time to get familiar with that form. Even though you can't submit it yet, and even though we're waiting for further guidance, it does have special documentation requirements, and you'll save yourself a lot of headache and heartache, possibly, by knowing what this form is requiring you to submit. We're going to go through the parts of the form. We're going to go through some of the important insight that SBA has provided and some provisos, if you will, that will keep you out of trouble and allow you to have that full forgiveness. When we first met, you heard Hannah say that transparency and the importance of documentation is crucial. And we're going to emphasize that again. You'll hear it more today. The other aspect is that you maintain a clear audit trail, whether it's paper or electronic, doesn't matter, that you can substantiate the money that was given to you through the loan backed 100% by SBA. So in other words, you're handling federal money, taxpayer money. So there's a lot of accountability and necessary awareness that you as the borrower can substantiate to anyone that asks the question. Your first responsibility is to provide that to the financial institution that provided you the loan. So, and this is where Dean's going to be jumping in here. So our guide to this application is really 4 parts. So the good news is there's actually a forgiveness calculation form. Now, when applicants for the loan presented the information to the lender, they made certain calculations that were based on what was known at the time. And if you would, you might want to consider that the best estimate given the instructions that were provided then. And you can imagine, and we can imagine, the task in front of the SBA to provide so much information and so much money, frankly, to so many people in small business. And we all know small businesses are a variety of types, right? They could be pretty complex, even though they're under the category or umbrella of small business, or they could be the traditional 2-person mom and pop or whatever, 2 people who are running a business and have been doing it for a long time and maybe never needed a loan. And now they're faced with the reality of having to apply for and receive and now manage the loan. So this calculation form, and we'll talk a little bit about that. Now, this is where the form sounds a little like a tax form. That was the reference that William Furman from SBA made yesterday at another chamber call. So there is a schedule, right? And the schedule is a process by which you're going to run your background data, but you must submit the calculation form and the Schedule A. So that's very important regarding the clear nature of the information, the fact that it could be audited by either the lender or the SBA, and that you'll see there's a cross connection between where this information goes. So we'll talk a little bit about that.
Yeah, Mike, if I could,
also, yeah, please go ahead, Dean.
if I could jump in here, when as the screen shows, the 4 application components, you would think that it's a logical progression through the application, that you would start with perhaps the first one, go to the second one, and so on and so forth. It really doesn't work that way. This 11-page document begins with 2 pages of instructions, and then you will see, because they number the pages in this 11-page document, which is helpful. However, you really sort of start at the back and move back to the beginning, because the numbers in the PPP Schedule A worksheet, the table 1 and table 2, you're completing that information, which leads into the Schedule A, which leads into the forgiveness calculation form. So that's why, you know, as Mike pointed out, we really encourage you to get a hold of this package and go through it carefully, because it jumps around a little bit, really quite a bit. And there's definitions we're going to be talking about that you need to understand in terms of the completion of these various documents. So just want to point that out.
And guys, it harkens back to elementary, middle school, high school math, when they used to say, show your work, show your numbers, write everything out. Would you agree with that?
Absolutely.
All right.
Absolutely right. And on that note, the necessity of however you do it, whatever your filing system is, however you retain important documentation, you want these to be in one place or in a fairly organized fashion that you can recall them and understand what you did, however many months or however long it's going to take. You know, there is a time window for the forgiveness application process from the lender of 60 days. But just imagine the number of loans that were given, a number of loans that are going to come back in terms of verification for forgiveness. So it's a little bit of a boomerang actually for the lenders. And we know that they're staffing up, they're getting ready to do that. And there is an optional form at the end of this, and that's by definition something if you want to provide. And just to say one more time, we don't want to overemphasize it, but the level of detail and the order of operations that Ann's referring to, not only mathematically, but I mean, literally, Dean, Karen Casey, another mentor, and other members of our team, we're looking at periods, commas, semicolons to the definitions. It's important for a close read. Okay. So we did mention, and this was a question that SBA actually, not that long ago, made clear that where you got your money from is where you're going to go back to make direct application for your forgiveness loan. So that connection between you and your lender is extremely important. You knew that, right? If you already have a loan, if you're seeking a loan, the financial representative, the lender representative you're working with, should also be in a position to help you with this. But you want to have everything ready for them because of the number of these that they're going to need to process. And Dean's going to jump in here because it was interesting when we were going through and understanding what the original instructions were and the detail that had been provided prior to this regarding something as seemingly straightforward as what is an employee and how is that person calculated. And so, Dean, if you would, not everybody is into the details of payroll. You want to talk about covered period versus this alternative payroll covered period?
Sure. And one of the things that came out was initially with the application was that the tracking of the spending of the money was going to be in an 8-week period beginning when you received the loan. And that raised a lot of questions and so on. Well, this forgiveness application somewhat identifies that, but doesn't perhaps correct it to the benefit of businesses, in my opinion. So it comes out with the payroll schedule, and they say the covered period is an 8-week period. And they specify very succinctly in the instructions, it consists of 56 days. that starts on the loan disbursement date. It's not the day after you receive the loan, begins on the day you receive the loan. You may make an alternative payroll covered period election if your pay period is a weekly or biweekly pay mode. So it says in the instructions, if your pay period is a biweekly or more frequent, you may elect to calculate your payroll using a 56-day period that begins on the first day of the pay period following the disbursement date. So in the instructions, they give some very detailed examples listing dates and when the beginning of the 56-day period, when the end is. And they're saying if you got a loan on a Saturday and your next pay period begins on Monday, then you may elect to use that Monday as the beginning of your 8-week alternative payroll covered period. What I'd also like to point out through this is that there are some calculations that allow you to use the alternative payroll covered period, but there are other calculations that specify the covered period. So the time frame is different on some of the calculations. So it really requires some fine attention to the costs that you're tracking and compiling for your forgiveness application. As Fred alluded to, if there can be some relief by Congress in terms of this 8-week period, whether it's 24, whether it's 10, whether it's 15, whatever it is, really serves to benefit the businesses who receive these funds, and we believe really carries out what the theme was presented to the business owners and all, that the government wanted to help businesses through the paycheck protection. This whole program was designed to put money in employees' pockets and to help take some of the burden off the state unemployment agencies by getting money into the employees' hands. And they're using the businesses as the conduit in that. If they don't work with the businesses to make that successful, there's going to be a lot of hand wrenching and grief over the end result of this. So optimistic and looking forward that everything we say today is going to be outdated very soon because of subsequent guidance. But we got to go with what we know right now, and because that 8-week period does click off pretty quickly, we want you to be prepared.
So guys, if I can clarify really fast. So there are 2 ways that you can opt to do this calculation, is what you're saying. You can crunch the numbers. And so, for example, if I had a loan that was dispersed on April the 8th, but my pay period begins on April the 15th, you can opt to begin your 56-day period on April 15th?
That is correct.
And that next pay period begins. The payroll begins the next cycle. Okay.
Right. And whatever the period's going to be, but let's say that it is the 56 days for argument's sake. Just envision that you have a new friend with your business, and it's documentation to that friend, the SBA, as to how you actually use this. So it's not going to be difficult to understand the necessity of documentation. And for most people, it'll be pretty clear. But what they're allowing here is the reality that not everybody starts a payday on a Sunday.
And I would just reemphasize your comment there. That is correct, provided your pay frequency is a biweekly or weekly. If you're a semi-monthly payer, then you're under the covered period calculation. And the application, you have to declare on your application whether you are a weekly, bi-weekly, semi-monthly, monthly, or other form of payroll cycle.
Can I ask a question about this? Sorry to interrupt. If your pay period, so if you get your payment, I mean, I think most people pay, for the week before. So like if you get your payment during a pay period, like say on a Wednesday and your week runs Monday to Sunday, if you get your payment on a Sunday, or on a Wednesday, can you count that whole pay period or only Wednesday to Sunday if you want to just go with the covered period instead of the alternative payroll covered period? Does that make sense?
Yes. And let me quickly glance back here because we'll make sure in this area, this is, Mike, is this where the incurred?
Yes.
This is where the incurred comes into play, I believe.
Yeah. Yes. And I think the theory you want to follow here is that because the loan may actually be deposited in your account, meaning a receive date, that's significant in terms of a date. But for payroll purposes, you're going to use that reference as to how you actually pay your employees. That's when your payroll clock starts.
Right. So you would use the days that you incurred payroll costs beginning with the date of your loan.
Right.
Dean, by the way, your audio is breaking up a little bit. We're going to ask you to hop out of Zoom and hop back in because we want to continue to hear what you're saying, but we think that it's you just need to reconnect. But Mike, if you want to move on to the next slide,
Sure.
but I know we're going to have a lot of questions about payroll syncing these dates up. So let's continue to look at, and again, that is a major part of the discussions happening in Washington because so many of you have reached out to your lawmakers and they have reached out to their constituents and have said, listen, this doesn't work. This doesn't make sense. So if it's not jiving with you, you're not alone. You're not the only one that have questions on it. So
yes.
Yeah.
Yeah. Okay. So you've heard about the fact that there's these two programs, right? And because of the fact that the government knows that your economic injury loan is primarily for working capital, but it had a little provision for other expenses like some types of payroll cost, what it doesn't want, SBA doesn't want an overlapping so that you're getting paid twice for the same expense. That makes sense, but we didn't know how that was going to work mathematically. And the form actually asks you to identify if you have received in advance your application number and necessary references. And then in the calculation, you'll be able to account for that. So it's really a pretty simple, straightforward process, but nonetheless, it's important to know that that's where these two programs interface in terms of your forgiveness. Now, I know probably some people are thinking things like payroll. Well, I use a payroll company. Someone else does that for me. I have a bookkeeper, and I really leave it to that person or whatever the case may be. I run the business. I have an assistant that handles all of those things, whatever the individual circumstance is. But we want to share with you why you want to be fully aware of how this loan is being used. And if we go to the next slide, we'll say why. So there's a lot of parts of this process, the definitions, the calculations that we could probably spend a lot of time on and wonder exactly what it meant. And we could come to a conclusion or get confirmation from SBA or whatever the case may be. But here's a page, and it's a whole page of small print that is very important to understand. And that is, it's called representations and certifications on behalf of the borrower. So there will be some loan holders and or process of accounting for the loan, that there will be someone that's going to assist you with this, whoever that might be, an authorized representative. It's very important to understand. I'm not going to read this whole thing verbatim, but we highly suggest you and whoever helps you with the administration of your business understand exactly what is going to be attested to. Now, you set a set of facts with the lender, right? You represented as the borrower exactly what your own circumstances are. Well, knowing that this is a loan from a financial institution, but that is 100% backed by SBA, meaning if you default, the bank will be reimbursed by SBA. If there's any problem in performance of the loan, the bank is not going to lose money on this loan. So that means the attention to detail is very high in use of federal money. So I am going to read a couple of these so that you all know about it. And it says, the government may pursue recovery of loan amounts and or civil or criminal fraud charges. So they're leaving all options open on the table. Now understand, this is not a misunderstanding of one of the details. This would be where there is a substantial difference between what was actually used, how it was represented, and how the loan application is going to be attested to. And it didn't take long. I'm sure you saw some of the news accounts that the Department of Justice was already on the trail of potentially some recipients of PPP funds that for some reason could be interpreted as misrepresentation as to what the actual nature of the business was, or number of employees, whatever the case may be. The other aspect is that they're leaving open that this could result in imprisonment from 2 to 30 years and $5,000 to $1 million. So I don't know what kind of analogy you want to use. I'll use a baseball one. This is kind of like the pitcher throwing a chin-high fastball in front of the batter, right? We think what this means is just pay attention to it. We know none of the people on this call are going to be involved, but there will be some in some places in the country where they're going to have run afoul of this, and you can pretty much rest assured that we'll be hearing about it. Now, the next important thing to know, and this has been a discussion about the connection between employees being paid and where state unemployment funds are being utilized. So what this person that is helping with you, or presumably the borrower, is going to say is that you're giving permission for the information, the tax documents submitted will be submitted to the IRS and or state tax or workforce agents. And part of the process that's going to be used in your schedule and your worksheets and the submitted information is identification of employees, so that if it's questioned or when the bank wants to see the details, just know that there could be a crosswalk between data sources, whether it's state workforce agents, unemployment, state tax, IRS. And it's also important to know that through this process, the SBA may still direct the lender to disapprove forgiveness if for some reason the borrower is found to be ineligible for the PPP loan. So let's just say that there is some representation made at the time of loan application, the loan is given. Now you're going to make sure you get this money forgiven and it's not actually a loan on your books anymore. And the SBA still has the authority to say, wait a minute, there's a issue here that would have prevented the borrower from being eligible in the first place. Okay.
And Mike, if I could jump in there, and I guess Hannah, this will get a chance to see how my audio is, but
much better.
I think in that situation, it could be that really goes back to your initial application, that there was a lot of questions in the beginning as to whether payments to independent contractors were eligible to be included in your employee calculation. And while guidance came out and clearly said no, we were really dealing with W-2 employee payments. If an applicant used a substantial amount of 1099 independent contractor payments as employees, I think that could be a situation, an example where, you know, the SBA would say they were never eligible for the loan. They may have been granted a loan, and therefore they would disapprove any forgiveness application. So I don't think that's going to be very prevalent among our low country businesses, but it's an awareness factor.
Absolutely. Okay. Now we're going to refer to this form by its number just for ease of display on in our discussion here. So that we're talking about the application form. And once again, I'm going to be relying on Dean for these details, but know that now we're going to get into the definitions that are necessary to have a full understanding of as you look at, and actually I'll offer the insight that Linda Prosser, her question was regarding the use of payroll money. Dean, do you want to go through this?
Sure. So the instructions there, when it's talking about eligible payroll costs, they did provide some guidance in terms of whether it's paid payroll or incurred payroll. And incurred payroll will touch down the screen here a little bit. And this, again, you're allowed to either use the covered period or the alternative payroll covered period. And that alternative payroll, obviously, again, would be the first payroll period after you received your loan. So your payroll costs are considered paid on the date the paychecks are distributed, or you create the ACH credit transaction for a direct deposit. If you're using incurred payroll, basically on an accrual type approach, it is incurred on the day the employee's pay is earned. And if you're using payroll costs incurred, then during that last pay period, they're eligible for inclusion in the calculation if they're incurred during that last pay period, provided they are paid on or before the next payroll date. So again, you're using that 8-week, 56-day period for the determination and calculation of your payroll costs. And if you're using days in your 8-week period where the employee has earned payroll, but it's paid after the 8-week period, as long as it's paid by the next payroll date, it's eligible to be included.
And we saw a thumbs up from Linda Prosser to ask that question, so we're glad that we answered that. And by the way, we should mention, none of the content of these slides is an interpretation or what Dean and I, or what SCORE or anyone else thought. This is right out of the form. We thought that was really important. One of the things we learned in this process is it has to be in writing from SBA or Treasury in order for you to rely on it and proceed, because that then becomes part of your documentation. Is you can point to this and say, no, I either got an interpretation from SBA in writing and here it is, or here's what's in the form, or whatever the case may be. Because we have heard a lot of different information, interpretations, whatever. And the last question we always ask is, could you do me a favor and show me that in writing? And where did you get that? So we can go ahead.
I can go on with this, Mike, if you like.
That's good.
So we've talked a lot about the 75% being the payroll costs. Well, we also have to give some attention to what are eligible non-payroll costs, and these are those not to exceed 25% of your PPP loan, these are limited to the business mortgage interest. It's not your total payment. It is only the interest portion of that payment. And they did provide some clarification in this forgiveness application that it pertains to real or personal property. And also for your rent or lease payments, it specifies for real or personal property. So there were some questions all along. Would a equipment lease or equipment rental be eligible for inclusion? And this tells us, yes, it is, provided that that rent or lease obligation and your mortgage obligation was in place on or before February 15th of 2020. I believe when we get into the documentation that's going to be required, that you need to have access to and make copies of those mortgages, those rent agreements, lease agreements, whether it's on your facility, whether it's equipment, to show that those were in place, signed prior to February 15th of 2020. Additional non-payroll costs are your business utilities. And there were questions about, does this apply, does that apply? Again, this forgiveness application specifies the types of utilities that are permissible expenditures. And you can see them listed there. Telephone or internet access service probably leaves the question, does that include cell phones? While it's not clear and specific, I think an extension would say if you're using your cell phone for business purposes, and that is a business cell phone or of that nature, I think it would be included. Now, notice the last bullet point here, that these eligible costs must be paid during the covered period or incurred during the covered period and paid on or before the next regular billing date, even if that billing date is after the covered period. So what I want to point out here, again, it's either a paid or incurred, but what I want you to see is that in this definition, you're dealing with the covered period. The alternative payroll covered period does not apply and extend to these non-payroll costs. And this is part of where you really have to give the attention to what component of the forgiveness application you're working with to know what your covered period or alternative payroll covered period is defined as. The other thing you'll see when you go through the instructions in the form itself, these items of non-payroll cost, there is a disclosure in there that says you're not required to include all of them if you're not seeking forgiveness of them, which is sort of a scratch your head type statement, but it, I think, really lends itself to the, you got to meet that 75% payroll test in order to have the forgiveness. And if you're loading up in this area, you may be disqualifying yourself from some forgiveness.
Really good point. And just to emphasize a point that Dean made and to our earlier comment about seeing it in writing, we had a client ask us a question specifically about leased office equipment. We submitted that question earlier today, this morning, to SBA, and received an answer that says, because it says leased office equipment, the answer was it would qualify. So that's the benefit of making sure that SBA is in agreement with it.
Okay. Guys, we have a lot of questions about the non-payroll costs. We'll get to those after your slides. Okay. Those of you who are listening in and have those questions, go ahead, keep putting them in the chat box and we'll get to as many of them as we can.
So Yep. Dean will jump in here. We just want to emphasize a couple things on this, and we'll make sure we have time for those questions. But there's various examples given in the document that are required for submittal. So, we won't go through all of them here, but it is very important to understand what would qualify for documentation. And to the extent it's possible, a third-party documentation like a bank statement, the state wage reporting, tax filings, canceled checks, whatever, those are third-party verification that will be very important to maintain. The other aspect is, and this was something that had not been discussed before, is that you're not going to have to submit these as examples, but it's very important to maintain them for 6 years related to this period of time. We're using 56 days. And those include things like job offers, refusals, firings for cause, resignations, etc. Whether those are ordinarily maintained in your business for that period of time in your document retention period, you're good. Keep them in an area where that will be qualified for this period of time. You'll save yourself a lot of headache.
Great. I found it interesting that this requirement for retention is at the bottom of the page 10 of the application. You know, I think a lot of people get fatigued by going through the whole process. And it's just interesting that I don't want to say that it was an intentional gotcha type situation, but to me, it just points out the necessity for being very careful going through this entire forgiveness application, because, you know, this is huge, I believe, in terms of the record retention, because, you know, 6 years to keep all this in place, accessible if needed. You know, you don't want to have to be scrambling in year 4 or 5 if for whatever reason you're asked to provide some documentation.
There was some terminology that was used in this form that had not been used before, and there were some definitions given that now are referenced in the form, and we won't go through all of them due to time today. But and Dean, if you want to add specifics around any of these, that would be good.
Well, I think through this, the full-time equivalent definitions, they give some examples in that to give the employer somewhat of an out, I would say, that in terms of either taking the number of hours that the employee works divided by 40 to determine a full-time equivalency, or they say you can treat someone who works 40 hours a week as one full-time equivalent, and anybody who works less than that as 0.5. So, you know, again, it requires your analysis of your business, because if you hire a bunch of people working 30 hours a week, they're in essence a, you know, 3/4 full-time equivalent. And if you hire 2 of them, you've got 1.5. If you make the election or the treatment to anybody who works less than 40 is a half full-time equivalent, those same 2 people are only 1 full-time equivalent. And so this whole calculation of the determination of the full-time equivalency really requires some attention, because this comes into the determination of whether you have any reduction of your payroll costs to determine your 75% threshold. And you have to make this calculation for each employee. So if you have, you know, 10, 15, 20 employees, you're going to be going through this calculation multiple times. And in the application, you'll see it's really a 3 or 4 step process. And you're having to look at their hours February 15th, and other periods. Now, there is a safe harbor that if you return employees to their pre-February 15th status by June 30, you have a safe harbor in this. So I know some businesses are concerned, they haven't brought employees back yet. There does seem to be a relief valve, so to speak, if you get them back in place by June 30.
Okay, we're really at the point where we can go to questions. We'll just have Kelly move us up. Remember, this is as of 1 o'clock when we started this. We're gonna, there's SBA emails coming in. The other thing too, we'll mention real quickly, and that is, highly recommend, if you haven't already done so yourself, get on the SBA mailing list, go to the SBA website, follow the information. And if you're looking for assistance from SCORE, it's easy, www.score.org, and we'll be happy to help you. Hannah, you mentioned that we have a number of questions, so we can roll right to that.
Absolutely, we do. And in the chat box, folks, we have put a couple of resources there, not only the loan application, again, if you have not seen it, the loan forgiveness application, we want to make sure that you download it. You know, it's kind of like, I remember recently during COVID, we were all in a group of friends, and we were going to play a board game, and I'd never played this board game, and they're like, you know what, you can read the instructions, but it's not until you just start playing, you'll get it, you'll understand it. This is kind of in that same vein, that you have to print this off. Just go ahead and just start going through it. Put a pencil to it. You'll understand it as you just begin to fill out. In my opinion, I think you probably just should start with the Schedule A worksheet, and then just start putting in employee name, compensation, employee name, compensation, employee name, compensation, and then just start. And then from there, we'll just start doing the calculations and start going through the definitions. So that's just been my takeaway from going through all of the pages. If I were in this position, I would just, again, go through it with a fine tooth comb. But to get through some of the questions here really fast, I do want to ask, there have been some questions, even though I know that we're not talking about idle loans or advances. On the very, very, very first page, on the calculation form, okay, it's actually page 3. The first 2 pages are instructions and definitions, but page 3, it does have idle advance amount and then your idle application number. There's a question in the chat that asks, first of all, that the advance amount, is that indeed the advance that you got, the $1,000 per employee, or is that your entire idle loan amount? And I don't see later in the document where that comes into the calculation, what your idle advance was.
Yeah, so you're exactly, that's a great question. It is that advance. It's the grant portion of the loan. The
grant portion. And so it asked for the amount there, but it doesn't, and I can't see where it asks you in any of the worksheets to plug that number in anywhere.
You're right. It isn't in there. I think that is part of what they're saying, further guidance to be issued to both borrowers and bankers. Because my understanding was that advance was going to be taken in consideration in the forgiveness amount. Right,
that it was just going to fold into the total sum that at that point you do your 75-25 calculation on. Okay,
right.
So
yes, and just to say real quickly, many people have received the advance part and haven't heard yet about the rest of the idle loan. So to the extent that hopefully they don't have to wait too much longer, but in the event they do, that's the part they know about right now. That's the grant part.
Okay, but if you just receive the idle loan and that's a whole separate loan that again, and it's asking you for your advance amount, not the idle loan amount. So if you took out one of those, that does not interface with the PPP. Is that correct? If you're paying the 3.75% interest on
that is a non-forgivable loan.
Right. Yes. Traditional loan through the SBA. Okay.
Right.
All right. So, Gary, I hope that answered your question. If not, we'll circle back. Does the loan allow us to pay the employees the difference between what they're making now and what they made the same time last year, assuming they worked similar hours, tipped employees? Does the loan allow us to pay the employees the difference between what they're making now? So in other words, I guess if their salary is different when you made application to where it is now, I guess for loan forgiveness, you want it to be more.
You do.
Okay.
That's why you really need to take your facts and circumstances and plug them in here to make sure you're meeting that payroll calculation.
Yeah, indeed. Canceled checks for all payroll checks, or are payroll reports sufficient? So I guess this has, Debbie's asking for substantiation and a document trail. Do you need to have the canceled checks on payroll, or can a payroll report be sufficient?
I think you need some kind of evidence that it was actually paid or dispersed, whether you're going to rely on a canceled check or you're going to rely on a bank statement that shows where someone could trace from the payroll report to a bank statement to show that amount of net payroll actually came out of your bank. I think there could be question if you just submit a payroll report. Payroll reports could be generated and never executed. So you want to be able to show and document that the employee actually got that money. So whatever's easier for you, whether it's a canceled check or whether it's your bank statement that ties to a check number or an automatic withdrawal or something, I think is critical.
Dennis was asking, I think we've covered this, is there a difference between an idle advance and an idle loan? And again, I hope we've covered that the economic injury disaster advance was something that it's asking you for how much that was on this form, but it is not, we don't know how it is going to be added into the 75-25 mix. But an idle loan is an unforgivable loan through the SBA.
Well, let me go back to the question about interfacing PPP and idle. We asked a specific question actually on April 17th, and we asked about that interface. And let me just read this because this is the reply from SBA. It says, the idle grant can be used for the same purposes as the idle loan, which is working capital, right? Paying bills, payroll, and accounts payable. The grant amount received will be deducted from the PPP loan forgiveness, regardless of how it's used. If the idle loan or grant was going to be used for payroll, the business owner must refinance the idle loan into the PPP. So we would presume that that's going to be in the second round of guidance of exactly how that's going to work. But for now, knowing that you're going to identify you've got a grant, which generally has turned out to be, if it's allowed by SBA, it would have been around $1,000 per employee.
Okay. I have a question about a non-payroll expense. I'm going over to that page. Does transportation utility include a company car? So I guess they're asking, is a non-payroll expense, could either, I guess, the payment for your car, if it's
I would have to say no. There's been no indication that any expenditure related to transportation, whether that would be gasoline, operating costs, et cetera, would be an includable expense.
So on page 2, eligible non-payroll costs. So these are a summary of costs eligible for forgiveness, non-payroll costs. It says covered utility payments, business payments for a service for the distribution of electricity, gas, water, transportation, telephone, or internet access for which the service began before February 15th.
Yeah, and seeing the reference to transportation, I think it was one of the first times we saw that, at least in recollection. So that would be an example of a specific question that SCORE would submit. We'll be happy to do that. Okay. Regarding company car, company paid transportation. knowing that a company car doesn't mean it's 100% used for company business either. There's the IRS requirement for reimbursement of personal use and so on and so forth. So that's down in the weeds, but we could certainly ask that for clarification on what constitutes transportation.
Yeah, thank you. Yeah, if you would add that to the list of questions.
Yeah.
Is interest on a line of credit secured by work property an eligible expense? The interest on a line of credit secured by work property.
It likely will be if it was executed on or before February 15th, 2020. Again, there's, these become the type of examples that is their intention to include that, yes or no?
Right.
Until we got this forgiveness application, we weren't for certain whether personal property was included or not. There was some feeling that it was only mortgage interest on your building and only rent payments on your buildings. The forgiveness application seems to extend that. So it would make a likely jump that a line of credit for business purposes that is secured by business assets would be included. But we need probably some additional clarification on that. Hopefully we'll get that.
Add it to the list.
We have it.
All
Okay.
right, we'll follow with Serena. Could cloud-based services be considered a business utility? And so again, one of the things it says is internet access is included in non-payroll costs. Cloud-based services.
I would tend to think that would extend to that.
Yeah, it would seem as though we can add that on the list too, but I'm wondering, is there anything about a cloud-based service expense that wouldn't be internet related, right? I don't know, so sounds like it would fit, but we'll ask that one too.
Okay, so Bernie is asking, lease expired and was renewed during the period. Does that renewed part still count?
Great question. The only thing that they have said is that the agreement was in place February 15th, 2020.
Yeah.
If it was renewed under exact terms, perhaps. Mike, you got another one to send off.
Okay, I got it.
Okay, this is a really good question, and I've seen this a couple of different places. So if you use the PPP funds exclusively for payroll-related costs, but that amount does not come to 75% of the original loan amount, can that be forgiven and the remainder of the loan be returned or paid back immediately? So 100% went to payroll costs, but it doesn't come to 75%.
I believe that it could be returned and paid immediately, although that wasn't the structure of the program. The program was whatever's not forgiven would turn into a 2-year loan, 6 months deferral on payments with the balance amortized over the remaining 18 at 1% interest. But I am aware of there have been some businesses that did make application, and they made application believing that their business was going to be impacted by COVID-19 at the time of the application. And due to the delay in getting the loan approved, one, I know specific example, they applied for it, I believe, on April 5th, and they got their approval for the PPP loan May 13th or 14th, just last week. And they reassessed their situation and said, when we applied for this, we believed we were going to be impacted. As it turned out, we don't believe that we were impacted to the extent of the intent of the program. We don't believe that we were eligible, and they refused, they refused the loan. Also know of one who got the money, accepted it, and then paid it back. So I think that portion most likely could be returned, paid back. That's probably a discussion that they ought to have with their lender.
Another good question coming in from Mark. Can a small or reasonable increase in wages be given during the period, or must the wages paid reflect the same amount prior to the eligible period? So we've had a lot of questions that in order to get to that 75%, or even can you pay a little more? Does it have to be even Steven from what the loan amount was based on in the period last year, whenever your covered period was determined to now?
I don't think it has to be the same. I think what you have to do is run your business under your normal business practice. And if your business practice is that you grant raises during this time of the year or quarterly or whatever, I think you make those decisions and you move forward. I'm going to introduce a concept that is a little troubling to me through this whole process. And it sort of builds off this, Hannah, I believe, in terms of meeting that 75% payroll test and why you really got to push the numbers for your employees. And I'll try to make this simple. When you made your application, you were looking at your 2019 payroll and they asked for average monthly payroll. And that was taking that divided by 12. Well, that total payroll represented a 52-week period, but they didn't have you divide it by 52 times 2.5. They took it divided by 12 times 2.5. And now your covered period or your alternative covered period is an 8-week period. If you take a very, very simple example of someone, whether you had a group of employees or one employee that made $52,000 a year, when you made your application and you divided 52,000 by 12, you get like 4,300 and some odd dollars times 2.5 is $10,833, give or take. 75% of that is $8,125. If you're paying the person the same amount, the $1,000 a week, during that 8-week period, you've paid them $8,000, but your 75% test is higher than $8,000. That's
not by much, but
not by much, but
you have a $125 bonus to give out.
But if you're looking for 100% forgiveness,
yeah,
this is that little trap door that I think you really got to be careful of. Now, that's just looking at total payroll costs. Because you get to include health insurance, retirement, that may be enough to make up that difference. That's why we just encourage you to get this and push the numbers based on your situation, because if we have 100 viewers on this call, there's more differences between the calculations just based on your own facts and circumstances.
Which is at the heart of why we're hosting this, is because you don't want to wait till the end of your 8-week period to start doing the math on this. You may need to make some of those adjustments or either in payroll or just make double sure, and don't leave it up to your payroll company or somebody to be making sure that you're optimizing your loan forgiveness. So back to a couple more questions, if you guys can hang on the line here. I know that we're past our hour. Let's see. When is the forgiveness application due? 30 to 60 days from the last of the 30 to 60 days from the last of the last pay period. How should that be certified? I'm not really sure. I'm not reading the syntax of Lisa's comment very well, but so when should this application, when should you go to your lender and turn this in?
I think there's, again, a little uncertainty in that. There was an earlier, before this forgiveness application came out, that said you ought to contact your lender during the 7th week of your covered period. I mean, I think it's communication from you to your banker, your lender, asking when do they want it, and whether it's 30 days after the end of your covered period, that's probably a reasonable period to be thinking about when you're going to have to submit it.
If all employees have been retained, does the FTE calculation for each employee need to be done, or does the employer qualify for the safe harbor?
I think they qualify for the safe harbor.
Yeah.
And I think that shortcuts there is, as you work through the worksheet, it sort of helps you through that if you've met this, then you can skip this step and go to the next step, and simplifies it somewhat.
We have a question, and I actually circled it here on one of the pages dealing with a all my pages are like flying everywhere. How do you handle an owner of an LLC who is the only employee and went by Schedule C for the salary calculation for the PPP? I actually, compensation to owners, the middle of page 6, line 9, asks you to total amount paid to owner, employee / self-employed individual, general partners. Right.
What you'll see as you go through this, when you look at that Schedule A worksheet, there's a table 1 and a table 2. And the instructions direct you not to include owners, self-employed people, partners, et cetera, in these calculations. Table 1 is anyone who annually made less than $100,000 a year. You list those. Table 2 are employees, non-owners, that would have made more than $100,000 a year, where you were capped at the $100,000. In the general instructions for the whole package, it specifically states that whether it's an owner or non-owner, that whenever you're inserting these amounts for someone who made over $100,000, you insert $15,385 in that schedule. So if it's that sole proprietor, no employees, only owner, you're correct, Hannah. On the Schedule A of the PPP, on that line 9 is where you would insert that amount for the owner, not to exceed $15,385.
And that's because I've seen that number. That's 75%.
That's $100,000 divided by 52 times 8.
Gotcha.
Which is different than how you made the calculation when you applied, because you took $100,000 divided by 12 times 2.5.
Which is that not 15,000? What would we say? 15,000.
385.
385 is the most any employee will be paid in the PPP in order to be covered. Correct?
That's correct.
Yeah. Okay. More questions here. Employees out on sick leave or workers' comp, how are they treated regarding the PPP loan? We might need to add that to the list, Mike.
We certainly will.
I have heard, correct me if I'm wrong, that if an employee is out on the emergency family medical leave or the emergency sick leave, that because the government is reimbursing you for that, the PPP is not going to cover the payroll of that person. That emergency family medical leave is.
Yeah, it would seem as though you wouldn't be able to collect twice, right? You're not paying the employee. They're being paid by somebody else, whether it's insurance or whatever. your payments for the insurance are covered, but under PPP payroll, we can get that clarified, but it seems though it wouldn't be.
All right.
In,
Serena,
in,
a lot
I
of
don't
good
know,
questions.
this may not be spot on, Hannah, but in the instructions on the Schedule A worksheet, cash compensation is the sum of gross salary, gross wages, gross tips, gross commissions, paid leave, parenthetically vacation, family, medical, or sick leave, not including leave covered by the Families First Coronavirus Response Act.
Okay.
Okay.
Full-time equivalent question. I started February 15th with, I'm just going to make it up, 10 employees. I will have the same number of employees on June the 30th. I had 2 employees leave of their own accord in January. Will this have any effect on my FTE calculations?
I don't believe it does. If you, because it doesn't have to be the same person. You can replace a person in your calculation. I think the key is if you have the same number of people by June 30 that you did February 15th, you should be eligible for the safe harbor. Because real briefly, the safe harbor exempts borrowers from the loan forgiveness reduction based on FTE employee levels if the following 2 conditions are met. The borrower reduced its FTE employee levels in the period beginning February 15th and ending April 26th, and the borrower then restored its FTE employee levels by not later than June 30 to its FTE employee levels in the borrower's pay period that included February 15th. So it seems that you could have that, what I would call a roller coaster effect, where you were at a level, the February 15th level is important, but then you can drop as long as you come back to that February 15th level by June 30, then you have the safe harbor reduction exception.
Dean, this is an interesting question. If you hire a CPA to help you with the application, can that be considered part of the 25% expense?
Boy, do I wish, but no, that's not part of the 25%. At least right now. Maybe we gotta talk to Fred to see if he can talk to his contacts to get some expansion on that.
Yes, call your congressman.
Right.
We have a question about, does health insurance costs still count towards payroll costs? I did not see that in the summary of eligible costs, and I actually have that in front of me. Payroll costs used to determine the loan amount, so I assume that's going to be in the covered amount. Salary or wages, payments of a cash tip, vacation, parental, family, medical, sick leave, and severance, health benefits, retirement benefits, taxes. Do not include employer portion of federal taxes that are separate from gross. 1099 contractors are not included in payroll costs, limited to $100,000 annual salary wage for each employee. Housing allowances are included in payroll costs, but limited to the $100,000 salary.
Yeah.
Okay. All right. So,
thanks for clarifying that. And the person that asked the question earlier, you answered part of it by finding that regarding sick leave, that's payroll. But I think with that person's permission, we'll want to know anyway, is what about employees that receive funds from comp directly, right? And long-term, short-term disability, which is a separate payer. Is that coordinated in this process or not? So that's the question we'll ask.
okay. Well, guys, once again, your expertise and time is so incredibly appreciated. Thank you so much. I suspect, and what I'd like to do with the permission of you guys, as well as the folks on the call, if we could have maybe a week and a half to continue to digest this forgiveness application, see what happens in Washington. We have all of your registration emails, and I'd love to do another one of these webinars to kind of sort through any of these extra questions answered from SBA, as well as future guidance that we get.
Great.
That's okay?
Sure.
Sounds good.
All right.
Thank you.
Everybody, Thank you again so much. We have recorded this call. We will send out a link. So if you want to go back and watch any of it, we again cannot stress enough the date and time that we're doing this on May 21st, so that you just know that this is what we know at this moment, doing the very best that we can to get you the information. Have a great rest of the day. Please reach out to your SCORE chapter, your SCORE partners. They are so willing and able to help you through this process. And those of us at the Chamber as well will certainly connect you to what resources we have. Have a good day, everybody. Thank you.
Thank you, Anna.
Thanks for attending.